The country narrowly avoided as a recession by growing 0.4% in the first quarter of this year. But according to economists, the growth could have been higher if the economy was not grappling with the effects of the severe power cuts and infrastructure issues which hampered the exporting of goods. Statistics South Africa released the GDP growth figures for the first quarter of 2023. They showed that in the first quarter, the South African economy expanded thanks to manufacturing, transport and construction, which drove this minimal growth. Increased economic activity was also reported for wholesale trade, retail trade and catering as well as accommodation in the period. But the rolling power cuts, Transnet's infrastructure issues and the lack of structural reforms will have an impact on growth in the second quarter of the year. Now let's unpack those numbers further with Thanda Sithole, who's a senior economist at FNB. Thank you very much for your time this evening, Thanda. So we narrowly avoided a recession, and one would have thought that the severity of the power cuts earlier this year and late last year in the fourth quarter of 2022 would have taken South Africa surely into a recession. But as we've just seen, the economy actually grew, albeit fractionally. Why would you say that was?
Sure, greetings to you and your viewers. So we had expected that the economy was going to enter a mild technical recession in the first quarter. Our expectations was for a quarterly contraction of 0.1%, but we were surprised by the 0.4 expansion in the first quarter. Load shedding was more intense in the first quarter compared to the final quarter of last year. It was about 40% higher. What is happening in the data is that if you look at the energy-intensive sectors of the economy, particularly mining and manufacturing, those sectors already grew from a high-frequency data in the first quarter, which indicates to us that there is some level of resilience in the economy, and that probably these sectors are becoming more and more innovative, and through alternative sources of energy are relying less on the Eskom electricity grid.
So that's interesting because, as you mentioned, manufacturing, mining, big contributors or energy-intensive sectors, and they've done well this time around. And so you're saying the fact that they're working to reduce their reliance on Eskom, we could potentially continue to see a trend of robust performance within these key sectors in the coming quarters, or might we see a turnaround?
Look, there are still fragilities in the economy. For instance, if you look at the year-on-year growth, it was subdued at 0.2% compared to the first quarter of last year. So the economy is still suffering the lingering impact of the pandemic, as well as the July 2021 social unrest. But also there are other headwinds that are constraining the economy, particularly hard power shortages, logistics challenges, rising inflation, as well as higher interest rates, which are all contributing to the lower GDP growth. I think going into the second quarter of this year, Eskom has actually put out some severe scenario where they see load shedding reaching stage 8. I think at that level, even those sectors that have put alternative measures in place, they might suffer in terms of production, particularly if we experience persistent level of stage 8 load shedding. But at this stage, we hope that through many measures that Eskom is going to take, including reducing planned maintenance outages, we could actually see some modest expansion over the following quarters.
Okay, so would you say then, and I know I'm being pessimistic with my questioning here, Thanda, but I'm trying to be as realistic as possible. Would you say, based on what the answer you've just given us, that a recession might still be on the table because of the South African Bank expecting power cuts to shave off about 2% on annual economic growth for year, but also taking into account their aggressive interest rate hiking cycle that has suppressed, unfortunately, a lot of economic activity?
So if we just look at the definition of a technical recession, which is 2 consecutive quarters of economic decline. I think that is now unlikely in the current calendar year. Our expectations was that was going to happen in the first quarter, and hence we had penciled in a quarterly decline of 0.1%. But since we have started the quarter on a positive note now, expanding by 0.4%, I think it's highly unlikely that we could see a technical recession in the current calendar year. However, growth is likely to be severely subdued compared to last year. Last year, growth grew by about 1.9%, revised down from 2% previously. And we think that growth could be somewhere between 0.1 and 0.4. Now, if you just look at that sluggish growth that I'm talking about now, you can effectively say that we are in recession-like conditions, if you can put it that way. But as for a technical definition of recession, I think it's unlikely that we'll see a technical recession this year. Obviously, the fact that growth, particularly if you look at the 0.4% expansion, so growth was broad-based across 8 sectors. Only 2 sectors declined in the first quarter. But even with 8 sectors expanding, we only at an aggregate level grew by 0.4%, which is very subdued. And that means that the economy is fragile. There's still fragilities in the economy, and any shock could actually push growth to below zero at any point.
Yeah, I mean, and those are the exact sentiments that were described by the IMF. So they're concluding their visit with our National Treasury officials and indicating that they don't expect growth to be more than 0.1%. And they've highlighted that they don't expect the public debt to stabilize this year. The power outages, as you've just described, might get to levels of stage 8, which are quite worrying for business. And of course, we're no longer going to be benefiting from those high commodity prices that we saw in the previous 2 years. Your thoughts on the IMF's assessment on South Africa's short to medium term outlook, and maybe if we have the ability, if we are able to get Transnet in order, if we're able to get alternative energy sources in bulk in order, and really just get the structural reforms in place that are absolutely crucial. Is there some hope for us this year?
Yeah, so it's critical to get the economic reforms going for the economy to start growing at relatively healthy growth rates. I think the medium term, I would say we are a bit optimistic on the medium term, but obviously the near term is a bit bleak, with almost everyone expecting economic growth to fall below 1%. This year, I think the IMF's assessment of domestic economic conditions is consistent with what we are seeing and probably what most other analysts are seeing. We also have growth of 0.1% for the year, and the factors that are constraining growth are common, similar to those that IMF is looking at. I think the most urgent thing to tackle is the issue of load shedding. Of course, there is the energy action plan, there is the economic reconstruction and recovery plan, and the President has also put in place or established the National Energy Crisis Committee to try and tackle the issue of electricity crisis in the energy sector. On the logistics sector, they put the National Logistic Crisis Committee also to look at the implementation of reforms in the rail as well as port network industry. So all those things, if they are being done speedily, they could set us towards a slightly healthy economic growth over the medium term. But obviously, the near-term growth doesn't look good. And this is not only a South African phenomenon, although South Africa's growth is expected to be much lower compared to other economies. But at a global level as well, economic growth is moderating as a result of higher inflation, tighter monetary policy, as well as financial conditions. So the near term is, in our view, is a bit bleak and is consistent with what the IMF is also seeing.
Thank you very much. I suppose let's implement the plans and make sure that the crisis committees that have been established are doing their work. Thank you very much for that analysis. Thanda Sithole, who's a senior economist at FNB.